Hey, welcome back everyone. It is time for another red hot covered call video. Hey look, today we're going to talk about how I use two of the biggest S&P 500 companies for some short-term profits. And I'll tell you what, I use the cash secured put for Nike and I use a short-term covered call on Microsoft. I'm going to show you how I did that in the charts and why I did that. But look, the days of me sitting on my hands worrying about the stock market are over. I look at every single day as an opportunity to make great trades, have success. I'll tell you what, times have not been better. Whether I make $100 or $1,000 on a trade does not matter. It's about having the success. Look, I've told you from the jump, it's all about having a green trade for me, right? I don't try to hit home runs, try to hit singles and doubles, and I do it every single month. Sometimes I do it multiple times every month, and I do it on multiple stocks. That's what I do here. I show you my trades, we talk about them, so maybe you learn something. I want to demystify this sometimes confusing, sometimes overwhelming strategy of selling premium. Look, if you have never been to my channel and you're wondering why I'm so jacked up and energized and just over the top, it's because I'm excited that I found a strategy for which I have success. I've told you for 3 years now that I used to day trade and swing trade with almost no success. Once my mentor Jerry showed me how to write covered calls and sell cash secured put, man, it has been nothing but hit after hit after hit. I call it my cash printing machine. Now look, let's go ahead and get to this. If you've never been to my channel, I do want you to subscribe to the channel. It's right there and it's free. And hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. And what we're doing is this. We're talking about using a short-term cash secured put and a short-term covered call for that weekly income. Look, I try to bring you the energy. I try to bring you the excitement to motivate you to either get you off the couch in the game, or if you've been in the game, I want you off the bench, man. These are some of the greatest times in recent memory in the stock market, right? The volatility is there and we can absolutely take advantage of that. And I want you to have that cup is half full mentality. We always look at the stock market as an opportunity, right? They could have down days, but there are always some opportunities somewhere. Look, I know you've heard Kramer say that there's always a bull rally somewhere. Well, he's actually right. There's always an opportunity for success. And that's how we look at it here. That's how I look at it every day. Now, looking at my most recent videos, man, I could really tell that you love it when I show you my trades. And this excites me because I know for a lot of you out there, and you tell me your stories, that when you see it, you hear it, you actually learn better. It sinks in a little bit more. And that excites me because that's how I learn. I love it when somebody shows me. And when you show it to me 1 or 2 or 3 times, it really sinks in. I start to feel comfortable with it. And when I feel comfortable with it, I want to do it. I feel like I can do it. Because I remember 3 years ago, I was afraid to do the strategy, right? Writing a simple covered call, a 30-day on some big S&P type companies. Man, that's simple. Well, back then it wasn't. Back then I was apprehensive. I was afraid that I was going to do something wrong, right? I had never heard of the cover call strategy, but then my mentor Jerry showed me, got me comfortable, and I'll tell you what, now it is one of the most simplest, easiest, and most successful strategies I've ever done. And I'm telling you, if you get your financial education, watch the videos, you do 1 trade, 2 trade, 3 trades, you become the next success story. I believe it. And hey, I'm pulling for you. We're going to be doing more of that as we go along, where I show you how I do certain things, because I could really tell you're excited about that. And hey, that's the important thing. If you're excited, I'm excited. We keep doing this, right? So let's go ahead and get to this. We are going to talk about how I use a short-term cash secured put and a short-term covered call to knock down some profits. In fact, this was a $218 crumb. And man, I love picking up the crumb. We pick up 1 crumb, 2 crumb, 3 crumbs. All of a sudden, we're talking real money, right? And if we do that on multiple stocks, multiple times a month, man, you can knock down a serious monthly income. I'm gonna actually show you what I've been making. Didn't hit my numbers for March 2019, but that's okay. We have many on the board for April. Let's go ahead and get to that right now. Now, as you know, I show you my numbers to motivate you. It's not to brag or boast. It's 100% to show you that if you stick with this game, you can make real life-changing money. Now, for me, since 2016, I've crossed the $130,000 mark. Now, as you can see, January was awesome, blowing away my $2,500 goal. February did the same thing. Now, March, I didn't meet my goal, $1,800. But the way I see it, we have a lot happening in April. I have a feeling I'm going to make some of that up next month. But what's important here is I'm laying the groundwork. I'm laying the groundwork for having learning a skill. So if I'm in retirement, right, and I need to generate some income, man, I have a track record and a skill that will help me in retirement. Whether I need to pay the bills or whether I want to travel or I want to help my kids or grandkids, right? That's the idea here. We have to develop a skill. You know, one of the things that always gets me is this. You know, I started doing this 3 years ago, and one of the things that jumped out at me is, you know, all the YouTube gurus make this strategy seem more complicated than it was. And for me, you know, when you put those hurdles in front of me, you know, I have to step my game up to get over each hurdle, right? Hurdles are the number one thing that's going to slow us down. They're going to make us procrastinate. And for me, the cover call strategy was that. I would watch the videos, I would hear of all the different lingo, and man, it just absolutely did not connect, right? And of course, that's why I always talk about Jerry, because he sat me down and really cleared those hurdles for me. Once he did that, I was able to move forward and have that success. You know, I'm out there just like you. I'm watching these videos and I'm seeing people say that the writing covered call strategy isn't profitable. They're sitting there telling you that you can only make an additional 5 to 10% a year, and it's not really worth it. And I'm sitting here thinking, what am I missing? What am I missing? I am knocking down 25% cash on cash in 2018, and as we sit right now, I'm already at 7.5% cash on cash, and we're only 3 months in. So for me, I don't know if they don't get it or they want to needle us into this idea that it's harder than what it is. Look, I remember 10 years ago when I had a broker, and I talked to the broker about writing covered calls on Chevron, and we talked about it. And man, he was not in it. He absolutely discouraged me from doing it. When I step back some 5-10 years later, I know why, right? Brokers don't want clients that are going to be high maintenance. And writing covered calls includes a couple more steps. And if you're going to be more active, you might do some things to close out trades. They don't want to have a high maintenance client. They want to call you up once a month, talk to you about Peter Lynch widgets and what he invested in, and then at the end of the call, mention that, hey, now might be the time to buy a couple hundred shares of Intel. Look, all I'm going to tell you is this. Once I got my financial education, man, all of that just cleared. Then I started to see the light. I started doing it and having success. That's all I'm telling you. That is all I'm telling you. Now look, let's go ahead and get to those 2 trades because I am absolutely pumped right now to show you how I used a short cash secure put on Nike. Nike reports earnings, right? And of course, leading into earnings, if you're listening to Mr. Buy guy, he's telling you, man, they are absolutely going to blow away the numbers and the stock's going to move higher. You do not want to trade Nike. You know, I'm sitting there thinking, hey, I'm going to watch Nike. I've owned Nike many times over the past 3 years, and earnings seems to be a highly volatile time for Nike. Why? They usually run up into earnings, and when they run up to earnings, Wall Street sells them off. Now, that does not mean they missed earnings or earnings are so horrible that they have to get rid of the stock. It's just how the game's played. And in the case of Nike, look what they had done. They had rallied up coming out of December with the rest of the market, but man, they hit overdrive. The stock goes from the low 60s all the way to 87. Man, this thing looks like it's going to $100. Well, of course, I'm watching Nike and I'm thinking to myself, look, if they miss earnings, this is going to be a great opportunity for one of those cherry pick and cash secure puts. And that's what I'm going to do right here. So as Nike announces, man, we wake up that morning and it is down. You could see it right here. Down some 6%. Look, do I have a crystal ball? Of course not. Is Nike going to go lower? I don't know. I know one thing. Once it bottomed, it was down about $5 or $6 and it just seemed like it was sitting there. I'm thinking to myself, all the sellers are going to come out of this. We're probably going to get a couple green days. So for me, I'm thinking cherry pick and cash secure put. With the stock tanking some 6%, those cash secure put premiums are going to be jacked up. And sure enough, that's exactly what they were. For a 1 week, 5-day cash secure put trade, I wrote in at the money and got paid $1.15. Now for me, I went ahead and did 2 contracts. That was over $230 in a cash secure put. Crumb. I had no intentions of letting that go to expiration because I felt that once Nike hit that bottom where I thought it was, I thought it would rally from 82.50, maybe get back to 84 by Monday or Tuesday, and I'd be able to buy that option back. Remember, I got paid $1.15 and at the money, 82.50. And if I was right and Nike bottoms out and heads a little bit higher to 84, this would drop by 50%. I'd be able to sneak in, pick up that $100 crumb. And that's exactly what I did. You could see Nike bounces, gets to about 84x, and I take that opportunity to buy back for 44 cents, well over 50%. It turns out it's only 123 bucks, and of course Nike ends up above 82.50, so I could have actually let this trade expire worthless. For me, the risk wasn't Nike, it was the market, because the market didn't have any conviction. I really felt the selling was out of Nike when it moved to 84, but I'll tell you, the market seemed a little wobbly, and I figured, look, this is a great two-day crumb, picking up 123 bucks, and we were going to move on. And that's what I did. Bought it back for 44 cents, and we move on. Now let's talk about that short-term Microsoft trade where I did a covered call. Now again, this is another weekly covered call. Absolutely love using Microsoft for this because huge volume, and when we have huge volume, we have tons of open interest. And what does that mean? That bid and ask spread will get nice and tight where it's 1 penny, 2 pennies. And if I'm going to play Microsoft for a short 1 week trade, chances are I'm going to write a $1, maybe $1.50 out of the money covered call for 5 days. I'm only going to get 35 cents. Now I know that doesn't sound like a lot, but look, this is a 5-day trade, very tight window 5-day trade. And if the stock were to move higher and have my shares taken away, so for me, I'm going to play that very tight $1, $2 window. If you remember last week, that's what I did. I think when the stock was trading about 117, I wrote a 119. The stock got above it, thought my shares were going to be taken away. Then on Friday, the markets tailed off heavily, and I was able to keep my Microsoft shares, and we were able to write another covered call for this week. Well, same deal. We get a little bit of upward movement. When the stock's trading at 117x, I rate that 119. I get about 35 cents for it, and for me, it's another Microsoft weekly crumb. I end up picking up $94 on this trade. I know it doesn't sound like a lot, but for me, hey, 95 here, 84 there, 123 here, all of a sudden we're talking real money. And that's how I see it. I know there's a lot of salty dog cover call writers out there that say, look, you're not making the 3% and 4% that make this worthwhile. What I'll tell you is putting 95 bucks in my wallet in a week, that's worthwhile. And that's why it excites me to do it time and time again. Now look, before I let you go, if you think all I do is use volatility for weekly trades, if you remember last week, my 21-day Chevron cover call came off the board. I was able to keep my shares. What did I do? I told you the next Monday I was going to write another cover call. That's what I did. 30 days with an April expiration. End up getting, when Chevron's trading at 123x, I wrote the 126 strike. I got $1.80 for that. And hey, we keep this rolling. And look, the X date is until May. So if I keep my shares, guess what we're going to do the following month? We're going to write that 30-day cover call 1 week past the X date. So I get the dividend. They pay $1.12. And hopefully on the following Friday, I have my shares taken away. Hey, look, this is what we do, and this is why I'm so excited. Having success, and I hope you are too. Now look, before I let you go, it is March 31st. I told you I was going to do the March 2019 newsletter. I finished that video yesterday. So what I want you to do is go to my website, ctpdashboard.com, click free newsletter, and send me your email address. In this video, I'm doing a 3-part video series of the very basics of cover call writing for anyone that's interested in the strategy, but they don't even know how to get into the stock market, let alone sell some premium. So I completed that video yesterday. I'm going to be posting this up. It's part 1. It is the super basics of setting up your account. You need to send me your email address. Hey, look, I hope you enjoyed this video, and if you did, bang that like button. And until next time, I hope all your covered calls are profitable.